All right, guys, welcome to Deal of the Week. So we do these. They're going to be more exclusive content, Deal of the Weeks. We do it by looking at a piece of real estate. Andrew?
That's me.
That's Andrew. He is our in-house acquisitions guy. So until Andrew is a good boy, he is going to have to find us more deals. So here we are. I hear there's a new format for Deal of the Week. Let's hear it.
Why do you have real estate versus stocks? You sit here and talk stocks. So what's the attraction of real estate?
Well, there's a lot of attractions to real estate, one of which is higher returns and forced savings, and it's less emotional, et cetera. There's a lot of benefits. The cons are it's illiquid, right? You can't sell it very quickly. A stock you can sell in 13.2 milliseconds. A piece of real estate takes 13.2 months to sell. Not really, but you get my point.
So when you're saying higher returns, why are they higher returns?
Because there's more hassle, more work involved. When you buy a stock, that's it, you're done. Unless you want to, if you buy a low-cost ETF, it's just ride it out until you retire. If you buy a piece of real estate, you got to manage it. You got to be involved with it. You got to see what's going on.
I'm just a person sitting in whatever city. How do I find a deal?
Okay.
So that's what we're going to do.
So we're going to pick a random city?
We're going to go pick a random property, and I'm going to walk you through it. So just like anyone in the country, go to HUDHomestore.com.
Oh, boy, I don't even know what this website is.
So a long time ago, we sat there and bought some homes that were repossessed through the government. So in this case, pick Georgia. All right, so we got on the screen. Do you recognize any of the counties?
The only counties I know in Georgia are like Cobb County and Fulton County. And
So do you have a Fulton on there?
well, let's just pick a county. Type in
We just
Fulton.
did Fulton.
There we go. 2 properties.
All right, take top one. Ding.
2050 Forest Park Road, Southeast. If you own this property, you don't own the property because HUD owns it.
HUD owns it. So this literally anyone can go get this right now. But my point is, go online, look at HUD, look at your state, look at your neighborhood. This is something you can go in and hunt and find yourself.
How do I get the pictures bigger?
Click on it.
Oh, there we go.
All right, so we got a ranch.
Oof.
Remember,
Does it need a carpet cleaner too?
we just need. I love that people look at this and go, just need some paint.
Oh boy, just
need some paint.
That's what a broker would say. When there are bars in the windows, you know you're in a Class A area. Oh boy. Holy cow. All the bars in the windows. Oh, nice little foliage out there.
So something that everyone's
wow.
seen. It's not bad.
No.
And there's a whole nother layer down there. So do me a favor. Now let's pull up, copy the address real quick. Cool.
Doop, doop.
Let's go to Zillow and let's look. You're going to type the address in, all that fun stuff. And let's look for what's for rent in the area. All right. Now we know where it is up top. We're going to filter for rent. Perfect.
Wait, it says for rent already.
Cool. Then do bedrooms. In this case, let's do exact.
3 and
3. Use
3.
exact match.
Apply.
Yep, and zoom out a little bit.
So look at 1300 right here. Okay, but look at this. Okay. Oh, this is nice.
Kitchen's not great, but you cleaned it up a little bit. And there's a 1400 and a 1500 in there. What do those look like?
Oof,
Bathroom's not great.
Bathroom's bad.
But I would say, do you feel like we can't get at least 1300 there?
No, I think we can for sure.
Exactly.
Well, it's cute. Oh, wow. Oh, wow. I'm surprised it's only 1500. The other one's 1300. I'd rather have this one for, I mean, look at this. I'd repaint the brick.
Yeah. So now, here's my point.
1545.
So with a couple steps, so we found something online and we already know what we might be able to rent it for. Remember, there's another option. If you stay in that same neighborhood, Paul, flip it to recent sales instead of rent.
Sold. Apply. 332,000? Jesus Christ.
Do you have bedrooms on 3 again, or do we
Yeah.
need to reset that?
But it's 3 bedrooms, 3 bath, though.
What's the house closest to it? I thought there was one like 299, like almost next door to it.
That one?
Yeah, look at that. So they painted the outside, shutters.
Yeah, but they're not showing inside
There's some-
pictures.
Again, outside's pretty clean. And the one thing you can tell is that home's not very big, right?
That is correct. This is a great comp right here. Not many. Oh, wow.
Well, you can see what it was and what it is too, which is pretty nice.
Yeah.
Now, the only reason I bring this up, obviously, you go buy something, you got 2 choices, right? You rent it, you sell it. And that's quick money or longer term money. But in this thing, the one thing that we always focus on, we can get into flips and all that stuff later on. If you were to do back of napkin, we did this a long time ago. What would you budget in terms of rehab?
For how many square feet is it?
According to HUD, it said 950.
925.
Yes. And then, but I think there's a basement version that might have another bedroom or something.
All right, so let's think about this.
So you got a kitchen, a bath, and 1,400 square feet of living room.
Call it 30,000.
Okay.
I mean, I thought 30, call it 40,000 high side.
Okay, and the price on this was 135 ask, is that right?
134.
Okay. So now what we're going to do is we're going to back in and say from a rental side, which is what we've always done. We're doing this a little backwards because we know the price. But now you've seen what a couple of things rent for. So now is when we start playing in, okay, we have an ask price. What do we sit there and think we might be able to do in terms of a value?
Can I put it into my...
let's throw it in. For all the people who haven't been paying attention, this real estate calculator, new version coming soon.
Number of units, 1. Appreciation rate, 4.
It's Atlanta.
Well,
that's pretty good, yeah.
Well, I look at history. I'm just going to look at history. Vacancy, 10. Purchase price, 134. Cost to sell, 7. 20-year analysis. Let's do a 30-year analysis. Cap rate upon sale, 6. No financing fee, 1%. I will refinance. I will rehab, but I'm not going to finance the rehab, which is an option here.
Vacancy, I would argue as you're going through it, I'd say 10, probably a little high.
Okay, what do you want it? 8?
Yeah, give me 8.
All right.
And one of the reasons I'm looking at it, most people stay in a home for about 2 years. If you're staying in a home for 2 years, you got, let's say on the high side, 2 months between someone leaving, fixing it up, and re-renting it. 2 months, you're 2 over 24.
I'm going to go $1,595 on the rent. Because that other house is $1,545. This will be newer. We'll probably do some nicer things in there. Putting $40,000 into it. I'm going to put $1,595, and I'm putting $1,200 right now for the rent, even though the previous house was $1,300. That was a shit condition.
Right.
But this is bad. Okay. Next, rehab. $40,000.
And again, when we're done, everyone, you can sit and play with the numbers. You can use different toggles to sit there and say, well, what if I only spend 35, or what happens if I go over budget and spend 45?
So I'm going to go to expenses. I'm going to go detailed here. Property taxes as a percentage. It's 1% Atlanta?
It's really cheap.
It's like 0.8%?
It's about 1. Yeah.
Okay,
so
1%.
Let's use that.
Management fee.
We're doing it ourselves. We talked about this before.
Insurance. $950, $750?
Yeah, do 800 then. We're going to hit somewhere right in the middle.
Maintenance staff, nothing. Leasing staff, nothing. Property manager, nothing. Maintenance and repair. 1,000?
Let's go high and go 1,000 for that and CapEx.
And 1,000 for CapEx.
That's a lot.
No advertising, no accounting.
Nope.
Landscaping, they're going to be responsible for that.
Have to do it.
Okay. Snow plowing, have to do it. Gas, electric, everything.
Snow plowing. It's
now,
Atlanta.
I will put vacant utils because on the 8% time it is vacant, you have to pay something. Let's call it $100 a year.
Yeah, because again, you're probably not running the AC. It's Atlanta, so it's not super cold down there.
Every 7 years, I'm going to refinance.
How many years do you run this on again?
30.
All right.
LTV, I'm going to go 75. Interest rate, 6. 30-year AM. I'm going to go 15.
And again, interest rates change. I know some people will be like, I think 20. You can do better in 6. Maybe you can because it's single family. That's fine. Again, play around with a number. Find what works for you. This is just getting that vague type of value.
I put in a refinance at 7, 15, and 23 years.
What'd you do for CapEx? I missed that in the beginning. Sorry, cap rate.
6%.
Okay.
Because it's single family home.
Single family. And this isn't the best way to find the value on a single family. The best way to find a value on a single family is to look at comps and see what else is selling that's exactly like it. Because this house will probably sell to someone who lives in it next, not necessarily go to another investor.
Correct. All right, so now the mortgage, a stable mortgage, we should have put that in first. I'm going to go 75% LTV. I'm going to put 6% interest, 30-year amortization.
So let's recap. We got a $134,000 offering. We've got about... You used to put $40,000 in rehab.
That's out of cash, out of our pocket.
We got rent just under $1,600, right?
Yep. So create the deal.
Yep.
Here's the cash flow by year. Obviously, the first year.
How long are you taking to do rehab?
1 year. First year. Negative cash flow because you're putting 40 grand into it. Do it very quickly. Buy it up, and then from there on out, value of the property skyrockets. Let's go view IRR.
What do you got?
20.8% to Andrew. Wow.
It's pretty good.
Now remember, guys, this is if you buy it and manage it yourself and save all your expenses. If you have to hire a third-party manager to do it, your expenses are skyrocketing. It probably doesn't make any sense. How much more does it skyrocket? Let's go over here. Expenses per unit, probably going to make it.
Well, what's it going to cost? You're looking at probably
Oh, wow.
You're going to pay $1,600 every other year for a leasing fee. So that's $800, and you owe 8% of revenue.
Yeah, it won't let me do like.
You can't type it in, just slide onlys.
Well, it maxes me out at 5,300.
Oh, yeah, because it only has a variance of a certain percentage.
But even then, it's 18.5%.
Yeah.
So let's go change it really quick to expenses. And let's call it, let's make the expenses another right here. $800 to account for that. To go to 6,000. Still a 17% IRR. Wow.
And again, this is a property that this isn't just sitting on an MLS. This is sitting on a national hub website. Anyone can go get this.
And you're putting 40,000 in day one. So your equity in there is 70,000.
Go back to Zillow. What were the homes that were selling nearby? Because remember, if you're starting to rent and you go, this sucks, I don't like it, I got to sell. I'm out, I'm done. What's your option? You sell the home. And the other homes that are selling are somewhere in that area, aren't they, Paul?
Yeah. 230 plus.
So even if you spent full price and then you have exiting commissions going out, I mean, if you only sell for 230, are you killing it? No, you're not killing it, but you're getting all your money back plus some, and that's going, I hate rental.
Guys, I'm going to tell you right now, if you live in the Atlanta area and you want to buy houses, what are you doing? You're going to make a killing. If you want to manage one home a year, you do one of these properties a year. But one of these, look at this. In your first refinance here, you get 95 grand out of your refinance. Yeah, this is.
But you pay taxes on that, right?
No brainer. You don't pay any tax on that money.
That's the best.
No brainer. And what's your property worth in X years? Where's the recap report? When you retire in 30 years, your property's worth $650,000.
And you've had tenants been paying it for the last 30 years.
Man.
Yes, you do need to keep a nest egg. We talked about this before, but the whole idea is I have stocks. I want to do something different. Do I want to put all my money into it? No. What were we doing here? For a short term, you're putting that 40,000 in, and then you're doing a 25% down payment on about 140 grand, maybe a little more with closing costs and stuff like that, right? Mm-hmm. So money goes in, but a year later you can refinance because one, you have a tenant, two, the home's worth more and it's fixed up.
So I'm not going to lie to you. I'm jealous of this.
Because it's a good deal.
Yeah, like I literally think to myself, like, we talked about owning properties in Atlanta. I'm like, if we could figure out a way to buy 100 of these homes in the same area to do it, why wouldn't we do that?
Now, you made a comment in the beginning. There's bars on the window. Yes. I haven't driven the area. I don't know exactly what it's like. You don't know what it's like.
Well, we saw those other properties. I'm like, this doesn't look like an area that has bars, right? Right, Tim?
Something's different. But by the way, the bars are there right now. So maybe that means, I don't know. But at the same point, they're still getting $1,500 in rent. $1,600. That's the point.
So let's say we don't get $1,600 in rent. Let's go back to our manage the property by itself. So expenses, I'll take it back down.
And then throw $1,500 in.
Where's the income? Let's go $1,495, which I don't think it'd be that low, but let's say that. You're still 18.7% IRR. Over a 30-year effing period.
So that's not even trying to sit there and say, oh, I want to be top of the market. I just want to make affordable rent where someone's going to move in. I don't have to hustle.
Yeah.
It's a pretty good deal. And again, someone called us up and they said, you guys talk about these things and there are these quiet MLS things and we don't know where they are. You talk about some neighborhood in Cleveland. So that's why I wanted to do this one.
What is it? HUD House International? HUDHomestore.gov.
Yep. And most of these are listed on the local MLS, but this is a way where you can go and see any property across the United States that's owned by HUD. And
this is assuming you pay full list price.
Yeah, full list. So
it's about a third of an acre.
People want to see what's going on in my state. I think what were there? If you went on the home, click home over there. I think Wisconsin didn't have one in there. There's a handful of states that I didn't see.
Nevada,
something
Utah,
in,
Montana, Wisconsin, Vermont, New Hampshire, and DC. see what's going on in Ohio.
So again, is it going to be maybe in your neighborhood? No, maybe there's only a couple per state, but this is a good place to start. And most of these homes, by the time it gets to the government and they've gone through all the legal stuff and people are out of there, yeah, most of the homes need a little TLC. Not all of them. I've seen some condos on here that look a little nicer, but things need fixed.
I like it. Well, this is how it works. And the real estate calculator is great for that reason. Guys, sign up for our software. $7 for 7 days, $1 a day. If you sign up now, you get the entire website, including Real Estate Calculator, for that $1 per day. In a month, Real Estate Calculator is by itself just for some high amount of money because it's a very valuable tool. Thank you very much.